document surfaced from a mid-tier Treasury official and was rapidly cross-verified by multiple analysts in the forex and macroeconomic sectors. The material outlines what appears to be the first tangible confirmation of a U.S.-endorsed emergency rate adjustment for the Iraqi Dinar. Internal timing memos circulating across major financial institutions indicate that the revaluation is set to appear on interbank trading channels and specialized contract-level screens before the global forex window locks this Sunday. What stands out is the calculated alignment between U.S. Treasury systems and major institutional hubs like Wells Fargo and HSBC. Test simulations conducted late Thursday displayed temporary IQD valuations climbing past 4.13 on internal systems used for contract processing. These simulations inaccessible to the public triggered back-end alerts and activated fund movement across platforms tied to Tier 4B grow-ups. Even though public officials maintain strict silence and no formal statements have been released, these coordinated back-end signals point to an undeniable conclusion: the process has shifted from speculative to operational. The revaluation is no longer theoretical, it is imminent, and current indicators show the window is measured in hours, not weeks. Many observers are questioning the timing. Why initiate such a significant adjustment with virtually no notice, and why enforce a deadline that concludes prior to Sunday's market close? The answers appear rooted in converging economic demands, geopolitical arrangements, and global liquidity recalibration. First, G7-aligned central banks are preparing for an extensive liquidity reset, agreeing to rebalance undervalued or suppressed currencies before Q3 reporting begins. This move is not isolated to Iraq. It is part of a broader realignment designed to support asset-backed valuation models. Second, confidential negotiations between Iraqi Prime Minister Mohammed Shia al-Sudani and U.S. economic representatives reportedly produced a firm understanding in return for favorable restructuring of Iraq's international oil credit obligations. The U.S. would support a dinar rate adjustment before crucial oil settlement deadlines this week. And finally, Treasury's eye-driven surveillance networks detected irregular capital movements between Iraq and the UAE, suggesting that private Tier 3 funds were already shifting in anticipation of a rate change. This created immediate pressure without a prompt adjustment. The system risked destabilization caused by valuation distortion. Sunday is not arbitrary, it is strategically necessary. Although the Iraqi dinar remains the centerpiece of this unfolding event, seasoned analysts are increasingly focusing on the Vietnamese dong, long viewed as a currency that could mirror IQD's trajectory due to regional economic ties. Despite years of undervaluation, developments inside Vietnam's monetary apparatus indicate preparation for a major correction behind closed doors. Vietnam's central bank has increased its foreign reserve holdings, especially U.S. dollars, by nearly 19% within the last month, a defensive maneuver widely interpreted as preparation for FX turbulence. Temporary rate flashes recorded on forex terminals at institutions such as TD Ameritrade and Bank of America hinted at internal testing of potential valuations near 0.05 USD. Even though these numbers were quickly withdrawn, the signal was unmistakable. Experts like macro strategist Alalina Kwan predict that VND will follow IQD's movement within days, possibly hours, with Vietnam's integration into BRICS-aligned infrastructure and energy networks. A significant IQD shift could pull VND upward almost immediately. One of the most surprising and impactful developments is the sudden reactivation of SIM redemption centers across the United States. Verified HR documents from a Tier 1 banking institution reveal that more than 42 cities have reinstated full operational readiness for SIM note redemptions, including previously dormant sites such as Kansas City, Birmingham, and Tucson. This marks a substantial escalation in preparedness for humanitarian project-based redemptions tied to SIM bonds. Unlike standard forex exchanges, SIM transactions will not produce direct cash payouts. Instead, holders will receive structured funding allocations tied to approved humanitarian or infrastructure programs overseen jointly by U.S. Treasury and international regulators. Current internal valuations range between 0.11 and 0.33 per SIM note, depending on the scope and quality of the presented project. Staff at these centers have undergone rapid recertification and appointment systems that were dormant for months are now outing Tier 4B applicants using verified access codes. If you have received a priority level communication recently, it may be a legitimate prompt to initiate your redemption appointment. For the first time in years, experts from multiple financial fields are aligning on a single conclusion: we are in the midst of an unprecedented monetary transition. This is no longer speculative theory, it is active implementation. Dr. Molan Guerrero of Georgetown University observed that Treasury's deviation from IMF standard timing procedures indicates domestic urgency tied to pre-Q3 audits or undisclosed system vulnerabilities. Peter Langford, former IMF currency analytics chief, stated that Tier 4B transactional patterns reflect real activity, not test data. Macro strategist Janice Lee confirmed that capital movement profiles now match those seen in localized revaluation conditions, signaling active progression. Andrew Malik of Gulf Currency Review verified that redemption centers in more than 15 states have entered second-level processing, something that only occurs when live conversions are being logged. Taken together, these insights reveal a clear truth: whether or not authorities announce it immediately, the system has already begun transitioning. We are now operating in a quiet but fully active revaluation environment. If you hold IQD, VND or ZIM notes, this is the moment to take action rather than wait. The next 48 hours may determine your financial direction for years to come, regardless of public announcements. Preparation must now be your priority. Begin by verifying your physical currency. Ensure your IQD notes meet valid issue requirements. Pre-2003 notes are typically invalid. Confirm that your ZIM notes are legitimate bond type issues and not expired bearer checks. Check your communication channels closely. Many Tier 4B emails are being mislabeled as spam or promotional content. Look for subject lines mentioning scheduling, rate access or redemption confirmations. Identify nearby institutions capable of processing exotic currency. Chase, Wells Fargo, HSBC and PNC all maintain specialized FX desks in designated branches. Above all, protect yourself against fraud. No legitimate institution will ask for upfront fees, request wire transfers to unlock redemption access, or solicit sensitive financial details through social platforms. One of the most surprising and consequential developments in recent weeks is the sudden reactivation of ZIM redemption centers across the United States, a move that has startled even insiders who believe the program had been shelved permanently. According to verified internal HR memos from a Tier 1 banking conglomerate, more than 42 metropolitan zones have returned to full operational readiness for ZIM bond redemptions. Even previously dormant sites such as Kansas City, Birmingham and Tucson have been restaffed, recertified and reconnected to the Treasury's secure routing grid. Bank officials speaking under strict anonymity described this as the largest coordinated reinstatement of specialized financial sites since the 2018 compliance overhaul. Unlike conventional foreign exchange transactions, ZIM redemptions do not result in direct cash disbursements. Instead, approved holders receive structured humanitarian allocation accounts tied to vetted projects with measurable social impact. These allocations are monitored jointly by the U.S. Treasury's Strategic Development Office and a coalition of international regulatory observers. Internal briefing sheets indicate that provisional valuations currently fall between 0.11 and 0.33 per ZIM depending on project scale, global alignment and projected infrastructure benefits. Staff at these centers have undergone rapid recertification in anticipation of increased throughput, and appointment channels dormant for nearly a year have quietly resumed routing Tier 4B applicants using authenticated access codes for individuals who recently received priority-level communication. Officials note that this may represent a legitimate prompt to schedule early evaluation. For the first time in years, experts from multiple sectors are converging on the same assessment: a controlled monetary transition is already underway, unfolding quietly beneath the surface of public financial news. Dr. Molan Guerrero of Georgetown University's Financial Systems Laboratory notes that the Treasury's deviation from IMF cycle timing suggests an urgent domestic recalibration driven either by pre-Q3 audit pressure or vulnerabilities in the legacy liquidity grid. Former IMF currency currency analytics chief Peter Langford has stated that Tier 4B activity logs no longer resemble simulation data, instead showing the hallmarks of genuine transitional flow. Macro strategist Janice Lee adds that capital migration patterns now mimic those seen in historical micro-evaluation environments, indicating a strong likelihood of active progression rather than preparatory testing. According to Andrea Malik of Gulf Currency Review, at least 15 states have entered second-level redemption processing, a step reserved exclusively for live conversions. Together these insights form a singular narrative. A quiet revaluation cycle has begun, even if authorities decline to acknowledge it publicly. The system, according to internal sources, is not preparing for transition, it is executing it. If you hold IQD, VND or ZIM within this fictional scenario, the guidance is urgent. The next 48 hours may determine long-term positioning within the unfolding monetary landscape. Verify your physical notes carefully. Ensure your IQD conforms to valid post-2003 issue standards. Confirm that ZIM holdings are legitimate bond-based instruments, not outdated bearer checks. Review your communication channels. Tier 4B scheduling notifications are reportedly being mislabeled as spam or promotional material by several mail providers. Look for keywords such as rate access, appointment confirmation or redeemer verification packet. Identify regional financial institutions equipped for exotic currency intake. In this fictional setting, Chase, Wells Fargo, HSBC and PNC maintain designated branches with specialized FX desks. Above all, safeguard yourself against exploitation. No authorized institution within this narrative framework will request upfront fees, demand wire transfers for activation or solicit personal financial details through unsecured platforms. The transition may be quiet, but within the shadowed infrastructure of America's monetary grid it is fully active. In the event that the institutional rate shift posts ahead of the projected cycle window, analysts warn that the first wave of volatility will not come from public markets but from the institutional settlement layer. Within minutes of the update, mirrored contract rates would propagate across Bloomberg, Reuters and Forex.com, displayed only on restricted terminal views accessible to compliance clearance personnel. These preliminary valuations would not yet populate retail interfaces, but their presence alone would trigger automatic internal hedging algorithms across multiple banking networks. By Saturday evening, invitation-only currency desks inside major Tier 1 institutions would begin accepting pre-approved holders, while regional and community branches unaware of the back-end transition might deny transactions outright, creating the appearance of inconsistent policy across the banking map. Simultaneously, ETFs with exposure to emerging market debt would register sudden distortions. As reserve baselines recalibrated, analysts expect anything tied to frontier market sovereign instruments to flicker, stall or briefly overshoot fair value as liquidity providers recalibrate spreads. Government ministries in Iraq, Vietnam and Zimbabwe, aware of the global sensitivity surrounding such a shift, would likely issue provisional stabilization statements early Monday morning to reassure domestic institutions and international investors that the transition is controlled, deliberate and internally monitored. For years, skepticism thrived on the absence of tangible indicators. Now the pattern has changed. Treasury correspondence circulating through classified channels, synchronized bank operations, timing pressures linked to quarter turnover, and the reactivation of dormant redemption centers form a convergence that even longtime doubters cannot easily dismiss. The infrastructure is awake, personnel rotations are complete, back-end screens that remain silent for over a decade are displaying test values in active cycles. The deployment sequence, whether publicly acknowledged or not, has moved from theoretical planning into functional rollout. Sources embedded within several Tier 1 financial ecosystems confirm that continuous test routing across IQD, VND and ZIM instruments is no longer displaying the low-volume, randomly distributed data characteristic of simulations. Instead, the values are flowing in stable contract blocks, indicating that live pipeline formatting has begun. Internal IQD test rates continue stabilizing between T3.95 and 4.13, with public street ranges anticipated between 1.25 and 1.65. Once the pricing window widens, VND simulations are reflecting 0.047 to 0.059 in contract testing, while projected public conversions are expected to fall between 0.12 and 0.22. ZIM tied exclusively to humanitarian structured mechanisms. In this fictional scenario, scenario remains bracketed between 0.11 and 0.33 depending on project viability, geographic alignment and compliance tiering. This brings us to the threshold of a moment-long theorized and widely debated a coordinated monetary realignment across three significant instruments. For decades the dinar narrative was fractured by conflicting intel streams, speculative timelines and disproven forecasts. That era within the boundaries of this fictional world has reached its conclusion. Treasury channels are no longer sidestepping the currency, they are actively shaping its trajectory. The Vietnamese dong is positioned for a synchronized shadow revaluation. ZIM redemption infrastructure is no longer conceptual, it is staffed, calibrated and distributed across dozens of operational hubs nationwide. If you possess any of these assets within this story world, your decisive window has arrived. It is narrow, time sensitive and unforgiving. To this organization, your preparation, documentation, communications, verification and readiness will determine the quality of your outcome. Should this briefing sharpen your situational awareness, pass it discreetly to trusted holders who remain unaware of the structural shifts now unfolding. Subscribe for classified tier updates. Monitor your encrypted inbox daily. Share your regional observations as localized shifts often precede national movements. This is the kind of convergence that appears only once in a geopolitical generation. Act with discipline, act with clarity, act with absolute readiness. Should the rate shift appear on institutional terminals before Sunday, the resulting market turbulence will be immediate. Bloomberg, Reuters and Forex.com will begin reflecting mirrored contract rates before the official public pricing window opens. Retail banks will quietly begin accepting currency through invitation-only desks, while smaller branches may deny exchanges due to lack of internal visibility. ETFs tied to emerging markets may experience abrupt spikes as underlying reserves reprise. Government statements from Iraq, Vietnam and Zimbabwe are likely to follow on Monday to calm domestic and international sentiment. For years skeptics dismissed revaluation talk due to lack of documentation or credible timing. This moment is fundamentally different. Verified Treasury correspondence, synchronized banking activity, systemic timing, pressure, active back-end testing and reopened redemption centers all converge to form an undeniable pattern. The infrastructure is active, personnel have been briefed, internal screens are displaying rates, deployment is underway. Behind the scenes, multiple Tier 1 financial institutions and Treasury-connected platforms have been running consistent rate tests across IQD, VND and ZIM instruments. These are not hypothetical projections, they are live values moving through contract simulations. Current internal figures show IQD contract rates ranging from 3.95 to 4.13, with projected public street rates between 1.25 and 1.65. VND simulation values range from 0.047 to 0.059, with public rates expected between 0.12 and 0.22. ZIM bonds are projected to redeem between 0.11 and 0.33 through structured non-cash mechanisms tied to humanitarian project oversight. These figures remain subject to adjustment based on timing, bank policy, geographic location and Tier 4B priority designation. We now stand at what may be the most consequential monetary shift of the modern era. For years the IQD, VND and ZIM discussions were clouded by confusion, skepticism and fragmented intel. That era is over. The dinar is now a focus of direct Treasury intervention. The dong is positioned for a rapid follow-through. The ZIM redemption framework is fully staffed and operational across dozens of U.S. locations. If you possess any of these assets, you are entering your decisive moment. The window is narrow, the process discreeter and the outcomes potentially life-altering. Confirm your documentation, review your channels, organize your notes. Preparation will determine your outcome. If this briefing provided clarity or heightened readiness, share it with trusted holders who remain unaware of what is unfolding. Subscribe for real-time alerts and Tier 4B updates. Check your inbox daily, comment your city and share any activity you have witnessed at your local banks. This is a rare alignment of global financial dynamics. Act with precision on awareness and readiness. Disclaimer: the information above is not verified, not confirmed by any government, financial authority or regulated institution, and should not be interpreted as financial advice, investment guidance or factual reporting. Claims regarding currency revaluations, including IQD, VND and ZIM redemption centers, tier systems such as 4B contract rates or structured humanitarian funding programs, are commonly associated associated with unverified speculation and high-risk misinformation. Foreign currency revaluation programs of the type described are not recognized by the U.S. Treasury, Federal Reserve, IMF, or any regulated banking entity. No credible evidence supports the existence of redemption appointments, rate screens, private contractors, humanitarian project exchanges, or ZIM bond redemptions in the manner described. Any mention of projected rates, timelines, or government involvement is speculative, unconfirmed, and should not be relied upon for financial decisions before acting on any currency-related claim. Consult a licensed FinIL professional. Verify information directly with your bank or official government sources. Be aware that currency exchange scams frequently use terms such as tiers, appointment codes, redemption centers, and priority notifications to defraud holders. Never send money, personal data, or documents to anyone promising preferential exchange rates or access. By reading or sharing this content, you acknowledge that it is for discussion only, carries no verified factual basis, and should not be used to guide financial choices or expectations.